Welcome to the Deep Dive. Today, we're cracking open the Q3 2025 earnings call for Incyte. And while the numbers look great, and we'll definitely get to those, the real story here feels like the strategic choices they made.
Yeah, it was quite something. It wasn't just a good quarter operationally. It was management really drawing a line in the sand, laying out a very specific, almost you could say ruthless plan for the next decade.
Ruthless is a good word. It felt like they used the strength of the current business to, well, justify some pretty aggressive cuts to the future pipeline.
They did. They had the money, the capital was there, and they chose focus over breadth. And the market seemed to like it, judging by the reaction. Investors seemed to appreciate that clarity, even if it meant saying goodbye to some potentially interesting projects.
Okay, let's back up that ruthless strategy with the numbers that probably gave them the confidence. Total revenues hit $1.37 billion. That's about pretty solid 20% jump year over year.
Very solid. And product sales specifically.
Yeah.
$1.15 billion, also strong, up 19%.
And you mentioned the operational side.
Right. The operating leverage really stood out to me. You've got ongoing revenues up 18%, but ongoing OPEX, operating expenses, only up 8% in the same period.
That's significant margin improvement.
It is. It shows a focus on efficiency, not just growth for growth's sake. And it definitely gave them the financial breathing room for this big strategic shift.
So with that kind of performance, updating the full year guidance was pretty much a given, right?
Absolutely. They bumped up the full year net product revenue guidance. The new range is $4.23 billion to $4.32 billion.
And OPEX.
Interestingly, they held that steady, $3.25 billion to $3.31 billion, which signals, I think, that they feel they can fund everything, the late-stage assets, the international marketing, without, breaking the bank on overall costs. Efficiency again.
Okay, let's dig into what's driving that revenue, the core products. Jacify first, the big one.
Yep, still the anchor. $791 million in sales. That's up 7% year over year.
Driven by demand growth across all three indications.
Yeah, about 10% demand growth, they said. But they specifically called out polycythemia vera, PV, as the biggest growth driver right now.
Okay, and that momentum led to a guidance raise for Jacify too.
A slight bump, yeah, to a tight range now. $3.05 billion to $3.075 billion for the full year.
Then there's Absela. That growth trajectory just keeps going up.
It's really impressive. $1,588 million in sales. That's a huge 35% year-over-year increase.
And the U.S. market is key there.
Definitely. U.S. sales were $144 million, up 21%. They pointed to strong prescription demand, but also, crucially, getting good formulary placement with the big three PBMs.
Pharmacy benefit managers. That access is critical.
Non-negotiable, yeah. You need the payers on board for that kind of sustained growth.
And if the U.S. is solid, international Absela is, well, exploding.
Exploding is about right. Sales up 117% year over year. Okay, it's off a smaller base, $44 million, but still. And they're pushing forward. They plan to file for Ruxolitinib cream in moderate atopic dermatitis in the EU by year end.
And if that gets approved, say second half of 2026.
Management thinks that could potentially double, maybe even triple, their international topical business. That's a major growth lever they're trying to pull.
Wow, okay. And new launch, Inctimo. Still doing well.
Yeah, still outperforming expectations. Pulled in $46 million in sales. That's up, 27% just from Q2?
And adoption looks good.
Very good. 90% of bone marrow transplant centers are already using it. They're getting close to that 1,000 active patient goal by year end, around 800 now. And they made a point of saying it has one of the highest contribution margins in the whole portfolio. So very profitable as it scales.
Okay, so strong core performance. Now let's get to the heart of it, this strategic shift. The CEO talked a lot about getting R&D priorities and cost base right.
Yeah, the phrase was fewer, smarter investments versus diffuse spending. Sounds logical on the surface.
But you called it ruthless earlier. Cutting something like the beta inhibitor program, which sounded like it was pretty far along, almost ready for registrational studies, isn't that throwing away potential?
Well, that's the debate, isn't it? And management seemed pretty unapologetic about it. They see it as a necessary trade-off. They stopped that one, the anti-CD122 program, Poverkinib, in CSU.
Chronic spontaneous urticaria.
Right. And the reasoning was consistent. Complex risk-benefit, too much competition coming, or like with CSU, tough regulatory hurdles, and maybe not enough differentiation.
So cut the perceived lower value stuff, Save the cash.
And immediately plow it into the areas where they believe they have what they called an asymmetrical advantage.
Which starts with their historical stronghold, hematology oncology.
Exactly. That gets the first call on capital. It's the priority. And the goal now, it seems, isn't just managing symptoms in MPNs like Jacifi does.
Myeloproliferative neoplasms.
Right. They want to shift to targeted mutation-specific therapies. Cures, potentially. And that brings us squarely to MLR 989. That's the big bet.
Okay, so the data update is coming before year end. About 50 patients, good follow-up time. What are we really looking for beyond the usual clinical stuff?
That's the key point. For years, success in MPN was measured by things like SVR35, TSS50. Basically, does spleen shrink? Do symptoms get better?
Which Jacifi does well.
But 989 is aiming higher. They're focused on translational endpoints, molecular changes,
Right.
like VAF reduction, that's variant allele frequency, measuring the actual cancer mutation load in the blood, and critically, reducing malignant megakaryocytes in the bone marrow.
So it's the difference between treating the symptom and attacking the underlying disease mechanism.
That's the idea precisely. They're trying to prove this drug is genuinely disease-modifying. If they can show that with the molecular data that they can tackle the residual risks like thrombosis or transformation that Jacifi doesn't fully address, then it changes the whole game. It could completely re-rate the company.
And if the data looks good, pivotal trials start when?
Likely ET, essential thrombocythemia, first half of 2026. Then MF, myelofibrosis, second half of 2026. And they also mentioned another asset, 617F, which could potentially be twice as big as 989 because the mutation it targets is much more common.
Okay, huge potential in hematology. Makes sense given their expertise.
Yeah.
But they're also building out in solid tumors, specifically targeting cancers that haven't benefited much from the IO revolution.
Yeah, immuno-oncology. They're looking for those gaps. Their TGF beta PD-1 bispecific, 890.
Right.
Showed some promising phase 1 data. A 15% objective response rate, which might not sound huge, but it was in heavily pretreated MSS colorectal cancer.
Microsatellite stable CRC. Yeah, that's a tough population, notoriously unresponsive to standard IO.
Exactly. So seeing durable single-agent activity there is notable. They're moving fast towards a phase 3 trial in first-line MSS CRC, aiming for 2026.
And the other one, 734.
That's the KRAS G12D inhibitor, also showing promise, particularly in pancreatic cancer. They reported a 34% objective response rate, 86% disease control rate.
Again, impressive numbers in a really difficult cancer suggest their strategy might be paying off there too.
It seems like it. Early days for some of these, but the initial signals are encouraging.
So let's tie this all back to the big elephant in the room, the Jacifi loss of exclusivity, the LOE, post-2029. How are they framing the plan to deal with that expected revenue drop?
Well, interestingly, they kind of reject the premise of filling a gap. Their narrative is about building a completely new long-duration revenue and cash flow stream that goes well into the 2030s.
Okay. And how do they get there?
They pointed to 7 key potential value drivers. You've got Poverkinib in 3 indications, 989, 617F, those 3 solid tumor programs we just mentioned, and Enctimo. Their calculus seems to be, we don't need all 7 to hit big. If just 2 or 3 of these really succeed, they believe they can build a business that's actually bigger than the current one, even after the Jacifi LOE.
That's ambitious. And 2026 looks like a key year for near-term launches too, doesn't it?
Yeah, several things coming. Ruxolitinib XR, that's the once-daily version of Jacifi. They're expecting maybe 15-30% conversion from the original by 2028.
Okay.
Then Absela approval in the EU, potentially. And Poverkinib launching for HS, hidradenitis suppurativa.
And they're even thinking about drug delivery improvements.
That's right. Partnering on subcutaneous, under-the-skin delivery devices for 989. The goal is at-home self-administration, maybe starting with the MF pivotal trial. Make it more patient-friendly.
And they brought in a new chief strategy officer.
In September, yeah. Explicitly to build out the business development, the BD capability. Seems they want a more structured approach to evaluating both external deals and internal pipeline decisions, keeping everything aligned with this high-value focus.
Okay. Which brings us to the part of the show you know you love. This is not financial advice.
Yeah.
Pure speculation here, folks. But if you were going to structure a trade idea around this whole Incyte narrative,
Yeah.
the solid core, the focused but risky pipeline, what would it look like?
Okay, yeah. Disclaimer firmly in place. Look, the market reacted positively to the quarter. That's probably priced in now. But I think there's still some caution, some skepticism maybe around this big pipeline transition, especially the jump from symptom management in MPN to potentially curative therapies.
So the trade needs to account for that uncertainty.
Exactly. So the idea would be something like establishing a synthetic long position on Incyte.
Okay, hold on. Synthetic long. Let's break that down for listeners, maybe not deep into derivatives. Why not just buy the stock? Why the complexity?
Fair point. Okay, think of it like this. You want the upside if the stock goes up long term, but you want some protection or maybe some income while you wait. So the synthetic long gets you that upside exposure, but simultaneously you'd be selling deep out of the money put options.
Selling puts that are far below the current price and expire way out in the future.
Right. And the rationale ties back to the science. The market is still, I think, primarily focused on the traditional clinical results for MLR 989. The real game changer, the thing that could justify a much higher valuation, is that molecular data. We talked about the VAF reduction, clearing out those malignant cells.
So you're betting specifically on that differentiated molecular data coming through. And selling the puts does what in the meantime?
It generates premium income now. That cash acts like a cushion, a buffer against maybe market jitters, or if the data takes a bit longer than expected, you're basically getting paid a little bit to wait for the potentially transformative data that proves 989 is truly disease-modifying, way beyond what Jacifi offers. It's a targeted bet on that specific scientific leap, trying to insulate it a bit from near-term noise.
A fascinating idea, really zeroing in on that molecular proof point.
Okay.
So wrapping this up for you, the listener, key takeaways. Incyte is executing very well on its current big sellers, Jacifi and Absela, no question there. But the main event is this deliberate, maybe even ruthless pipeline restructuring. They're focusing capital only on what they see as high-value targeted assets, especially in hematology and oncology, charting a course for growth well beyond the Jacifi LOE.
Yeah, they're betting heavily on concentration, on focus, rather than keeping lots of options open. Which leads to the final thought for you to chew on. Incyte consciously walked away from programs like that beta inhibitor, which seemed pretty advanced. The big question is, will this focused, perhaps ruthless strategy actually get them to their high-value goals faster by avoiding distractions? Or have they maybe given away too much valuable optionality, essentially handing potential future treatments over to competitors?
Something to definitely consider. Remember, do your own research. This isn't investment advice. Thanks for tuning in to The Deep Dive.